You're on mute, Helena. Helena, you're on mute.
I'm so sorry about that. I had a box popping up that I couldn't unmute myself. Anyway, sorry for that. Following on from Chris's really inspiring talk and those good ideas about what can be set up within village halls and other redundant sort of buildings in the community, I'm delighted to welcome Dr Gareth Morgan, who's kindly joining us today. Gareth is from Kubernetes Partnership business, which is its own partnership, and he's going to talk about the issues of charity law and trading. So it's an area that I know I'm not sure about, and I know there's lots of people in the ACRE network are keen to hear about this as well. So welcome, Gareth. I'll pass over to you. Thank you.
Well, good morning, everybody, and thank you very much for this invitation to speak to your conference. I've been with you all morning and I've heard the other presentations, and you've certainly had some interesting stuff. Incidentally, I was previously down at Sheffield Hallam University, where I was leading a cross-faculty group concerned with voluntary sector research, and I worked with some, I didn't actually work with Tom Archer, I worked with some of his colleagues, and so it was great to hear his work, and also to hear from the Blunkett Foundation as well, which is always very interesting what they have to say. So thank you for that. So I'm going to share some slides on the subject of charity trading law, some issues for village halls. So we're focusing on the question of how does the actual law for charities around trading relate to the various new ventures and initiatives that you might want to consider. So this is quite a whistle-stop tour of some quite detailed issues of charity law, tax law, and things around that area, which obviously I won't be able to cover any of these points in detail, but I hope it's enough of a flavour to enable you to consider what else might be helpful. So let's start by saying, what is charity trading? The legal definition of trading is the process of the exchange of goods or services for consideration between willing parties. For consideration, so it means that somebody is paying for something. Normally they're paying for it in money, although in principle, even if you pay for it by exchanging one item for another item, it's still trading. But it's where there's actually a commercial transaction going on, in the sense that someone is paying for something, either for some goods or some services. When trading takes place in third sector organisations, whether it's in charities or other types of third sector settings, it's often described as social enterprise. But it's quite important to say that in law, there is no definition of social enterprise for most purposes that I'm talking about today. So social enterprise, in a sense, is a term that you can use fairly flexibly. There are, of course, very important umbrella bodies that do set rules on how the term should be used. But in terms of the actual law of the land, what we're more concerned with is charity law and tax law. So trading in charities arises whenever the charity sells or charges for something, and you could then say it's a trading charity or it's charity trading. But in most cases, and this is quite important, there aren't many charities where the whole of the work of the charity is trading. Most charities also have grants and donations, and we'll look at the distinctions there. So broadly speaking, you can divide all charity income into three main categories. Donated income, which is where something is given to the charity, grants, donations, legacies, all given to the charity. Then you can have investment income, applies to some charities. You might have bit of bank interest. If you've got significant investments, you may have dividends on shares and so on. And then there's trading income, which is our focus today. So sales income, payments on contracts, that kind of thing. And I do want to stress I'm focusing mainly today on trading by the charity itself. I know you were hearing in the previous session about situations where a charity might let some of its premises to someone else. I will come back to that at the end, but I'm looking today really at trading by the charity itself. So here are some pretty obvious types of trading by village hall charities. I work myself with a number of charities running village halls. Renting out rooms to other organisations, that's a very obvious kind of trading. People don't always think of it as such, but of course it is. If you actually charge somebody to rent your rooms, then clearly that's trading. Selling refreshments. If the charity itself, if the village hall charity actually sells refreshments, then that of course is trading. Excuse me. If your own charity, the charity running the village hall, puts on concerts, drama or other events and you charge people to come to the event, that of course is trading. If you raise money by selling raffle tickets, that's trading, because you might say, isn't it just a donation? But no, people are buying the chance of a possible prize. And also selling goods at fundraising events, you jumble sales, stalls, craft fairs, all that kind of thing. If they're being done as fundraising events, that would all be charity trading. So as I was saying a moment ago, it's very important in terms of managing a charity, the role of the trustees, making the financial decisions, to distinguish the donated income and the trading income. Excuse me. And so donating income is a situation where a donor or a funder makes a gift to the charity and doesn't ask for anything in return except an acknowledgement or a receipt for their gift. Or sometimes there are trivial things in return, but normally a donation has nothing of any significance in return. It can be a large or small amount. You know, you might be doing a cash collection and people give you a 50p in a collecting box or a bucket at an event. You might be receiving a £10,000 grant from a major funder. You might be receiving a £250,000 legacy to your charity, but they all count as donated income. And the relationship is primarily governed by trust law. So the donor or the funder is giving these funds to you, trusting that your trustees will use it properly according to the purposes for which it was given. If something goes badly wrong, they might be able to sue you for breach of trust, but it's not a contractual relationship in most cases. And as I'm sure pretty much everybody knows who's had involvement with accounting of charities, grants and donations can be either unrestricted, that's gifts for the general work of the charity, or they can be restricted, gifts given for specific projects or activities. And of course, it's absolutely imperative in terms of how you handle your accounts to be able to distinguish between restricted and unrestricted gifts. In terms of trade income, on the other hand, it's probably better to talk about the person providing the money as the customer, because they're actually buying something now. I know people sometimes do still use the word funder, but it can be safer to think of them as a customer. So a customer agrees to buy something from the charity, and goods or services are provided in return for payment. Again, it can be large or small. It could be you're running a cake stall and someone pays 50p for a cake to go with their cup of coffee. It could be someone renting rooms, pays you maybe £400 a day for rental of good quality room. It might be a £50,000 a year contract for services. Some charities have outside bodies, public sector bodies, buying services from the charity. They would all count as trading income to the charity. Now, the relationship in trading is primarily governed by contract law. You've got a two-way relationship. I will pay you this if you do this work. If either party breaks their agreement, you can then sue them in the court of law. So if the customer doesn't pay, you could sue the customer. But equally, if you don't carry out the work that you've agreed to do, the customer could sue you. Or if you fail to deliver on the quality or any other kind of agreement as part of the sale, they could take action accordingly. Now, in terms of the charity's accounts, trade income is normally unrestricted, and this is a really important point. If somebody's paying for you, paying for something, it's not, generally speaking, a trust relationship, it's a contractual relationship. If you go to Tesco's and buy a loaf of bread, you can't say, well, I don't think it actually cost you £1 to produce that loaf of bread. I want you to treat the rest of the money as being restricted. It's a commercial relationship. So normally, if you manage to make a profit or a surplus on a trade, then that is unrestricted funds that you can use to support the work of your village hall in whatever way you think is appropriate, whatever way the trustees think is appropriate. There is one exception to that, and that is in the case of fundraising events, where supporters are promised that the proceeds will be used for a particular purpose. So if, for example, you organize a fundraising concert and you say all proceeds from the concert will be used to support the new roof for the village hall, then of course you are promising people that by engaging in that trade, the profits will be restricted to a particular purpose. So if you tell people, and it's almost always with a fundraising activity, if you tell people the proceeds will be restricted, then it's restricted, but otherwise fundraising events are normally unrestricted. So let's see where this fits into the whole thorny area of tax law. There's a bit of a myth that charities are not subject to tax. You know, if you ask the average person in the street, you say, you charities, tax, people think charities, oh no, charities shouldn't have to pay tax. Well, of course, as we know, that's not the case at all. And you can divide the taxes into sort of three main areas. First of all, there's the taxes where there's kind of no special relief for charities. So, for example, employers' national insurance. If you employ staff, you have to pay employers' national insurance if their earnings are over the relevant threshold. And worth stressing, of course, if you're budgeting for this, bear in mind the extra 1.25% on the employer's national insurance for next April. There's been quite a lot of publicity about the employer and the employees element, but of course, there's extra for employers as well. Insurance premium tax, similarly, if you most village hall charities will need insurance, and you have to pay insurance premium tax on that. No special relief for charities. Then there are the taxes where there are some charity reliefs in specific circumstances. There are some concessions around VAT, which I will mention in a moment, but it is important to appreciate they're quite limited. And in the majority of cases, charities still have to pay VAT as normal. So if you need to buy some furniture or some crockery or something like that for your village hall, or if you need to do repairs, you will, of course, normally have to pay VAT on it like anybody else. There are some concessions for charities around VAT, but they are quite limited. Business rates is an area where there are some broader concessions. As you'll know, there is mandatory 80% relief from business rates for charities, and in many cases, local authorities do give 100% relief to village halls on a discretionary basis. And then there are taxes where there is a general relief for most charitable work. Normally, the profits of a trade are subject to corporation tax or income tax, but in many cases, trading by charities is exempt from corporation tax, but we'll see the details of that on the next slide. If you receive investment income to a charity, that is exempt from income tax, whereas normally if a private individual gets income from share dividends and so on, it is taxable. So that's a big benefit of being a charity. There is also the huge benefit of income tax refunds on gift aid donations. So if you're getting people to give to the charity and they sign a gift aid declaration, then as they're a taxpayer, you can reclaim their income tax as part of that. But that, of course, is related to donations, not trading. So I won't say more about that today. Capital gains tax. If a charity has some investments and they go up in value and then you sell them, you don't pay capital gains tax on the profit you make accordingly. Charities are exempt from inheritance tax. If someone leaves a legacy to a charity, there's no inheritance tax on that element. Whereas if their estate was over the inheritance tax threshold and they leave it to a relative, then it would be subject to inheritance tax. And also charities are exempt from stamp duty land tax if they're buying property. So there are quite a lot of exemptions from tax for charities, but not everything. But there are some provisos to all that, as noted by my asterisks. The exemption to corporation tax largely only applies to primary purpose trading by the charity, and I'll come on to what that means in a moment. And also when it comes to business rates relief, do bear in mind that business rates relief can be lost if charitable premises are substantially sublet for non-charitable purposes, and that is quite a sensitive area to think about if you're talking about letting out part of a village hall for business use. So trading by charities, there are actually two very different types of charity trading, and it's absolutely imperative if you're considering anything where your charity is going to be charging for something to say which category does this fall in. The first category is primary purpose trading, where what the charity is selling, the goods or services that you're providing, are directly advancing the objects of your charity. And here are some fairly obvious examples. A village hall renting out rooms for community purposes. Now, I do want to stress that about the community purposes. Not all room rental is linked to your charitable objects. I mean, your charitable objects are normally to provide a village hall and equivalent facilities for things like lectures and education and for advancing the leisure time occupation of the community. If you're letting out your hall for those kind of purposes, then that is charitable trading. If you're selling tickets for a community event, I'm talking about one being run by the village hall itself, not another group renting your hall. But if you, as a charity, are selling tickets for an event, it's clearly a community event, maybe most of the people attending are from your area of benefit, that would be primary purpose trading. If the village hall charity actually starts running services for the community, so for example, if you directly run a village a play group, not a separate charity renting rooms, but if you actually run a play group and therefore you charge fees to the parents and so on, that would almost certainly fall within your charitable objects, and therefore it would be primary purpose trading. And also selling refreshments at any of the events above would count as ancillary trading linked to your primary purpose trading, so that wouldn't be taxable. The other type of trading, though, is trading for fundraising purposes, where the purpose of the trade is to raise funds for the charity rather than the actual trade. The actual nature of what you're providing is part of the charity's advancement of its objects. Now, you do have to think quite carefully about this sometimes. Why are we selling what we're selling? Are we selling it to raise funds, or is the nature of what we're charging for actually part of our charitable objects? So here's some examples of trading for fundraising purposes. A village hall renting out rooms for commercial use or private parties. It's worth bearing in mind that private parties are private use and therefore wouldn't count as charitable trading. Selling tickets for a fundraising event. The fundraising event is raising money for the charity, but at the end of the day, the tickets, you come along here, have a really fun event and so on. In most cases, if the whole aim of the event is just to raise money, that would not be primary purpose trading. Selling refreshments at a fundraising event, again, would be trading for fundraising purposes. Selling mugs, pens, souvenirs, and so on, again, would be trading for fundraising purposes. You're just looking to raise money. Now, I know people say, yes, but the mugs are going to raise money for the charity, and yes, they will. But I don't know any village hall where part of your charitable objects is to provide mugs for the mugless. Are you with me? That's not actually directly advancing your charitable objects. It's only helping the charity in terms of raising funds. It might be raising your profile, but it's still not directly advancing your charitable objects. Selling raffle tickets, and also cafe sales, where you actually run the bars and cafes at a village hall. That is not charitable trading, except in the case on the left-hand side of the slide, where it's directly linked to an event. So running refreshments at a charitable event is fine, but if you just run a general cafe or bar, then that wouldn't be. So why does all this matter? Well, it matters largely because of the tax rules on trading. And this is where you might say, gosh, do we really have to worry about tax? And I'm afraid the answer is yes, you do. Now, obviously, not many charity trustees are going to be experts on this, but it is something where you need to think through which category your work falls in and ask for further help if necessary. So let's talk first of all about corporation tax. If a trade makes a profit, then the principle under the laws of the UK and most countries is that it's liable to tax. In general, trading by individuals, partnerships, or for that matter, trusts is liable to income tax, and trading by corporate bodies or associations is liable to corporation tax. Now, if you've got a village hall which is structured as a charitable association or as a CIO or as a charitable company, corporation tax will apply. But there are some village halls still working as charitable trusts. And in that case, income tax would apply. But actually, the broad principles about how you decide whether something's taxable is pretty much the same. So I'll take corporation tax as the focus, but the rules under income tax are very similar. Now, the general principle is that if a trade makes a profit, even if it's run by a charity, it is liable to corporation tax on the profit. What do we mean by profit? Well, profit equals sales minus expenses. So you've got to look at this trading activity. What income do we get from the activity? Take off our expenses, and the difference is profit. And the general principle is that in most cases, the current rate of corporation tax is 19%. So in general, if you're involved in trading that goes outside the limits that we're talking about, you have got to budget to be able to pay over 19% of those profits as corporation tax. I do stress not 19% of the revenue, because you can take off all the expenses. So, for example, the upkeep of the building, for example, a share of that could come off as an expense. But you've got to look at the income less the expenses and consider profit. And do bear in mind, it's up to the charity trustees to tell HM Revenue and Customs that you are trading and to pay any tax due. It's not their responsibility to chase you. If you've had a charity that's in the past or only been involved in grants, donations and charitable trading, and you start some non-charitable trading, you need to tell them. But there are no less some pretty broad-ranging exemptions from corporation tax for charities. First thing, of course, is bear in mind if there's no profit, if the trade just breaks even, if the income and expenditure is the same, the profit is zero. So even if it was liable to corporation tax, 19% of naught is naught. Then secondly, there is a complete exemption for corporation tax for charities if it's a primary purpose trade. And similarly, the same rules would apply to income tax if that would be the applicable tax. So if it's trading like renting out your rooms for community purposes, running concerts and playgroups and all those kind of things that fall within your charitable objects, that's a primary purpose trade. So even if you manage to make a profit or a surplus on that activity, you don't pay corporation tax on it. There's also an important exemption which helps some charities. I'm not sure how many village halls this would apply to, but there's an exemption for trading by the beneficiaries. So, for example, if you're a youth work charity and you run projects where the young people are actually doing the work, then that would count as trading by the beneficiaries. So, for example, if you've got the young people running a car wash or something, but you'd have to have work with young people as being specifically part of your charitable objects. And there aren't many village hall charities that would have that specific focus. Then there's the exemption for ancillary trading, it's called, like I gave the example of refreshments at a performance. So if you've got a main trade which is clearly charitable and you're providing refreshments or something that's clearly ancillary to that, then that would be also exempt from corporation tax. Now, even if it's trading for fundraising purposes, there is a very nice broad-ranging exemption from corporation tax for the profits of a charitable fundraising event. In other words, people have got to clearly understand that even though you're selling tickets or whatever, and even though it's trade for fundraising purposes, if it's clearly raising funds for a charity as a clearly defined fundraising event, then it's exempt from corporation tax. And that's great for the vast majority of jumbo sales and cake stalls and all those sort of things that you might want to do. But it is limited to a maximum of 15 events of the same type in the same place each year. So you can't, for example, go around opening a cafe in the village hall every Friday for the whole year and say every one of those openings is a fundraising event, because that will be 52 events a year and you're allowed 15 events of the same type. Admittedly, you could have 15 weeks with a cafe and 15 weeks with a concert, but you can't do the same thing more than 15 times a year to count as an exemption for these purposes. But also there's a very helpful small trading exemption. So even if your trade is trading for fundraising purposes, and even if it doesn't come under the other exemptions, you can use this one. So let's look at the small trading exemption. What this basically says, and this is written into the Finance Acts, is that even if trading by a charity would otherwise be taxable, so even if it's not primary purpose, it's not a fundraising event and all that, the charity is still exempt from corporation tax on small-scale trading if the turnover of the activity, now this is not the profit, this is the total sales, is within the following limits. Any charity can have up to £8,000 a year of non-charitable trading. But if you're a reasonable sized charity, you can actually have up to 25% of the charity's total income can be non-charitable trading, up to a maximum of 80,000 of non-charitable trading income if the total income of the whole charity is at least 320,000. So you obviously need to know what the total income of the whole charity is in order to see where this fits. And that exemption applies to trading by the charity of any kind, so long as the profits of the trade are kept within the charity, and that will of course always be the case. So here's some examples of how that works in particular cases. If you've got a very small charity with only £6,000 income a year in total, the whole of that could come from non-charitable trading, because that will be within the 8,000 limit. If your total income is 15,000, you'd still be allowed 8,000 of that could come from non-charitable trading, because everybody's allowed £8,000 of income from that. If your total income of the whole charity was £240,000 a year, you could have 25% of that could be non-charitable trading, so you could have 60,000 of income from that. And if you were quite a sizable charity with 500,000 total income, then the upper limit of 80,000 would apply. In that case, you wouldn't be allowed as much as 25%, because there's an 80,000 total limit overall. So you will see you can get away with quite a bit of non-charitable trading before a problem comes. So if you've got a few commercial lettings and private parties, or maybe some commercial sponsorship, or maybe a small-scale cafe which is only open fairly limited hours, if the turnover is within these limits, then you don't need to worry, it will still be exempt from corporation tax. By the way, if anybody's got questions on all these, do put them in the chat, and we will try and come back to them later. I like the comments from Louise about therapeutic work by car washing by young people. Now let's move on to the question now of the other big tax on trading, which is VAT. And please bear with me because I'm bombarding you with two different taxes in a very short session, but they're both important, although the rules are somewhat different. Now, VAT is a tax on almost all kinds of trading income. In general, if a charity is selling anything, whether it's selling goods or services, the norm principle is that you have to charge VAT and an exemption applies. Now, VAT applies only if you're above, or it's only compulsory if you're above the current VAT threshold. And in the UK, that's now £85,000 a year. So you only need to worry about having to register for VAT and charge VAT if your total trading income is over 85,000, but you need to look at all trading income across the whole charity. However, you don't have to count trading income, which if you were VAT registered would be VAT exempt. And in most cases, your lettings income from renting out the hall would be VAT exempt. So in most cases, you don't need to count that, but you do need to look at other kinds of trading. But again, you wouldn't have to count the trade from fundraising events because they're exempt. Now, where VAT applies, believe it or not, there are actually 6 different categories we now have to think of in terms of splitting things in our accounts. So if your charity does become VAT registered, it's really important that the treasurer or the finance officer, whoever's doing this, really understand these details about the different types of VAT. First of all, there's income which is completely outside the scope of VAT. In other words, it's not trading income at all. And the main category there would be grants and donations. They're not subject to VAT. And people sometimes get mad and think, oh, we're VAT registered, we've got to charge VAT on everything. You know, someone's come in with a £20 donation, I've got to charge them £4 VAT on top. No, you don't charge VAT on donations. It's completely outside the scope of VAT. And similarly, grants are, although you do sometimes have to be very careful with public sector funders to decide whether something is a grant or a funder. Then there are the services that, although they are counted as trading income, they are VAT exempt. And in most cases, room hire fees are VAT exempt. So if you're renting out your rooms, that's basically regarded as a supply of land, a supply of physical space, that's generally exempt from VAT. And likewise, fundraising events, if they satisfy the same definitions for corporation tax, no more than 15 events of the same type in the same place each year, they are also exempt from VAT. Then there are the cases where VAT does apply, and there's the different rates applicable. Now, some things, although you sell them, they're subject to VAT, the rate of VAT is 0, which is really nice. Books are a key example. Children's clothes. Most kinds of cold foods sold for takeaway off the premises. So if the village hall itself ran a village shop, most kinds of cold food would be 0 rated for VAT if people are buying them to take away. Now that's really nice because 0% of VAT, of course, doesn't add anything on the price, but it does mean you'll be able to reclaim VAT on your purchases, which we'll come on to. Then there are a few categories of things which are subject to the lower rate of VAT, the 5% rate. There aren't going to be many village halls selling things in this category. It applies to things like sales of domestic fuel. Now, as a charity, buying your fuel supplies, you should only be charged 5% if your village hall is mainly a non-business venue. But if you're selling sanitary products, contraceptives in vending machines, for example, those are subject to 5% VAT. Then there's the current reduced rate of VAT on catering at 12.5%. This was all part of the special concessions that the Chancellor brought in to help the hospitality sector recover from COVID. So apart from sales of alcohol, if you're running a bar or cafe, or at the moment until the 31st of March next year, even if you are VAT registered, you only have to charge 12.5% VAT on those, but it will go back to 20% from the 1st of April next year. And then there's the standard rate of VAT, which is 20%, and that applies for everything else you sell. So all trading income, whether you're selling goods or services, if it's not covered by the exemptions or the 0 rating or the lower rate, then it is subject to 20% VAT. And therefore, if you have more than £85,000 of trading income, you have to charge VAT. It's legally required. And if you don't register for VAT, you can face quite severe penalties. So let's look at some practical implications of VAT for village halls. First question you need to ask is, do we have more than 85,000 of non-exempt trading income? Now, it's probably only a few quite large village halls with quite substantial commercial activities that will say yes to this, because, as I said, in most cases, the room rentals will be VAT exempt and they don't count towards the total. Now, I say in most cases, there are a few cases where community buildings have done what's called an option to tax. In other words, you ask to make the whole building a taxable place, in which case you can reclaim VAT on all your building works, but you then have to charge VAT on your rentals. So do just watch out. There are a few cases where community buildings have done an option to tax, and in that case, VAT would apply even on renting out rooms, but that's the exception rather than the rule. Income from fundraising events wouldn't count because they'll be VAT exempt. And income from education supplies. So, for example, an educational playgroup or preschool, a supply of education is VAT exempt. So you've got to look at your commercial trade that falls outside those exemptions. Often things like bars, cafes, or normal commercial shops open to the public would be the kind of things that would take you over the limit. So if you are over the limits because of that, then do bear in mind that, for example, if you have a bar or cafe open to the public, you will need to charge the standard rate of VAT from next March. It's still 12.5% until then. So the hall would have to register for VAT, and you'd have to do VAT accounting on all your sales and your purchases. But if you are VAT registered, it means you must charge VAT on all your sales unless they're VAT exempt. But you can then reclaim VAT on your purchases, and that can be quite helpful. And so although you might, someone comes into your cafe and they have a coffee and a cake for £5. Well, actually, if you want to charge them the VAT in addition, you'd have to charge them £6 altogether, £5 plus VAT. But do bear in mind, in terms of running cafes, you need to tell customers a VAT inclusive price. You can't say the cost of your coffee and cake is £5, but there's VAT on top. You've got to tell them the VAT inclusive price. But you can then reclaim the corresponding VAT on your purchases. So all your quick kitchen equipment and crockery and tables and chairs for the cafe and cash registers, all those kind of things, you can claim back the VAT on your purchases. But nonetheless, if the trade is making a profit, as you hope, obviously the VAT on your sales, that's called output VAT, will be a lot more than the VAT you can reclaim, the input VAT. So you will end up paying over quite a substantial amount at the end of each quarter to HMRC on your VAT return. Now, we've talked about corporation tax, we've talked about VAT, but let's now come back to some of the issues of charity law and how does that apply. Sometimes people say, oh, trading, no, you can't go around trading, you've got to set up a subsidiary company. It sometimes comes from professional advisors who don't actually know, who know a bit about charity law, but not quite enough. The general principle is that a charity can trade. If you're in doubt, look at the powers provisions in your charity governing document. Look at your constitution. And typically it says the objects of the charity are so-and-so. And then it will say, in furtherance of those objects, but not otherwise, the charity has the power to do the following. And it will almost certainly allow you to do trading for your primary purpose. And it would normally also allow you to do trading for fundraising purposes, so long as it's not taxable. So don't worry in general for someone saying you can't trade, but do bear in mind you want to keep it within the limits that we've talked about. But substantial non-primary trading is often prohibited. Most charities cannot run a large-scale commercial project that would be liable to corporation tax as part of the charity itself. If you get into that situation, you then need to look at establishing a trading subsidiary or a trading arm, and I'll mention that briefly on a later slide. But another key issue around charity trading that people sometimes forget is the public benefit requirement. As a charity, you must advance your objects for public benefit. That means a wide section of the public must be able to access your goods and services. If you start charging high prices for a charitable trade, are you excluding people? Now, I do stress this is only an issue with your charitable trade. I mean, don't worry too much about charging quite a lot of tickets for a fundraising event, because that's purely there to raise funds. But if you are running an activity such as a playgroup or a concert or something that is part of your charitable objects to provide that activity, you do need to make sure that what you charge by way of admission charges, for example, is affordable even by poor people. If it starts to become something that is really a private club and only quite rich people can afford, that's quite a challenge. I know this is quite difficult when you're not running an activity yourself, when you're letting out an activity to someone else. So we had an example earlier on of an exercise class. I know a lot of exercise classes are run by private teachers renting space in the village hall. Well, that's technically a commercial letting, but perhaps you might consider that if they gave an undertaking that the actual cost of the classes were going to be kept low, you might be able to take the view that even though it was a commercial letting, it was nevertheless a charitable rental within your charitable objects. But you see the need to take quite subtle decisions in those cases. So if it is primary purpose trading, who is paying? And if the beneficiaries or the service users are paying for themselves or their parents, is it affordable even for poor people? That's crucial. And there's some useful Charity Commission guidance on trading in their booklet CC 35. So let me just do a very simple case study of a village hall which is getting into some trading, and let's see how these rules affect it. So let's suppose last year it had £70,000 income, and let's suppose that all the income was from grants, donations, and charitable room rentals until last year. But they now start some trading initiatives to raise more income, some other types of trading initiatives, more than just room rentals. And what are the implications? First of all, they decide to start a playgroup, and it's not an external playgroup renting the village hall. It's the village hall itself as a charity directly running the playgroup. Let's suppose they charge £5 a child by 20 children by 48 weeks of the year. Well, the total revenue for that is 14,400. So you're not going to get into VAT even if it was applicable, but actually, as I said, a playgroup is the supply of education, so it'd be VAT exempt. And even if it was a non-charitable trade, you're well within the 25% of income. But again, this is clearly primary purpose trading running a playgroup. You do need to think, though, perhaps about whether the £5 a child is affordable. You know, is that going to be a significant cost for poorer people? That is a fact to consider. But I don't think the playgroup is going to get you into corporation tax or VAT issues. Now let's suppose you start a significant event to raise more income through commercial lettings of the hall. Maybe you know of a business which wants to come and use the village hall and run carpet sales or something like that. Let's suppose you manage to get £1,000 a week of rental income from commercial lettings. That's 48 weeks of the year, £48,000 income. In general, that would still be VAT exempt because they're just renting space, so it's a rental of land. But you are almost now talking about trading for fundraising purposes, and it is now more than 25% of your total income, and it's more than 8,000. So you are going to have to think now about accounting for corporation tax on the profits. Maybe you might want to think now about whether a trading subsidiary would help in that situation. But if you're doing it directly to the village hall, you do need to start thinking about the possibility of making a corporation tax return and paying corporation tax on the profits of that activity. I do stress it won't be corporation tax for the whole 48,000 because you can deduct a share of your expenses, your fuel bills and your repairs, pro rata to the commercial lettings, but it looks to me like a commercial trade. Thirdly, what if the village hall itself directly starts operating a bar or cafe, quite a major cafe open on fairly extensive hours, good range of customers. Let's suppose you manage to get takings on average of 2,250 a week for 48 weeks of the year. That gives you total revenue from the cafe of 108,000. That is obviously above the £85,000 VAT threshold, so you must register for VAT. It's worth bearing in mind, of course, once you register for VAT, remember that 20% on the sale price now has to be treated as VAT. So actually, your 108,000 will actually come into your own accounts as being £90,000 net plus 18,000 of VAT that you will pay over to HMRC. Nevertheless, you will be able to reclaim your input VAT, so it won't be as much as that. And it is mainly for trading for fundraising purposes. You couldn't argue this is primary purpose trading, and therefore, if it's a general cafe open to the wider public, not specifically linked to charity events, and therefore, I would recommend you operate that through a trade subsidiary, not by the village hall itself, in order to avoid corporation tax. So what about some of the other structures to consider when the trading would not be appropriate for the charity itself or it's outside the limits? The most common one is that the charity itself, so the village hall charity, sets up a trading subsidiary. You almost always want to structure this subsidiary as a company, but very often I recommend using a KIC, a community interest company, to handle that non-primary purpose trading, because it shows to everybody that it's still a community venture, a community enterprise, but with the profits going back to the charity itself. So the subsidiary takes, or you now arrange that all the activities of the cafe are done not by the Village Hall charity, but by the subsidiary. So the subsidiary sells the teas, coffees, cakes, lunches, and so it takes the revenue and it pays all the expenses of the supplies and the wages of staff working in the cafe. And hopefully it makes a profit. And then at year end, you arrange that the subsidiary company gift aids its profit to the charity, because the whole idea of setting it up was to support the Village Hall in the first place. So those profits are given to the charity under corporate gift aid. It's not like an individual gift aid, a corporate gift aid, but that means the subsidiary can take that amount off its own corporation tax calculation. So actually you end up with no corporation tax in the subsidiary. It doesn't pay any corporation tax, but the charity then gets the profits of the trade to support its other work. But you might say, well, doesn't this allow to get around tax rules and everything? The answer is, well, not quite, because bear in mind, you've now got part of the premises being used for different purposes. Think about, does the cafe need planning permission? You may have issues with the local authority about business rates. You know, if they've been granting charitable rate relief on the whole building, but you now start running it most of the time as a commercial cafe, they might well say, well, it's no longer eligible for business rates exemption, or maybe you've got to do an apportionment and ask for it to be divided into 2 different occupiers for business rates purposes. And do take care of the governance of the subsidiary. Remember, it's a separate company, so it needs its own board. You probably want some trustees on the board of the subsidiary, but you don't want all the subsidiary board to be trustees of the charity. You need some people who can think independently about running it as a commercial venture. The other possibility, if the charity doesn't want to get into setting up a subsidiary, is to agree a kind of commercial concession, as it's sometimes called, where the charity agrees a long let, a lease or more often a license, with a private business to occupy certain parts of the premises. And I was encouraged to hear from the previous presentation that Acre can provide a standard license for these sort of situations. So you allow an independent business to run some activity in the Village Hall at certain times on certain parts of the premises. So all sales and revenue of that activity then go through the independent business. They're nothing to do with the charity directly, but you must agree that the business pays the charity a realistic rent, or sometimes you might perhaps agree a profit share. But it's really important that if the charity is going to allow a substantial part of its building to be used for non-charitable purposes, you must make sure that you're getting a proper commercial rental back for that space. The rental income is usually going to be VAT exempt, and if it's a reasonably long-term rent, not just the odd day here and there, it will normally be treated as investment income to the charity, so you don't have to worry about that being non-charitable trading. But I do stress it depends on the detail of the agreement. But obviously a good relationship is vital. If you're renting out your Village Hall to a commercial provider, think about how that affects the charity's reputation. You don't want someone to damage your whole reputation as a charity. And again, the business rates and planning permission can be issues. So just a couple of points by way of conclusion. Trading income is, of course, a great way for charities to generate more income. Most village halls, of course, are already trading extensively, at least in terms of your room rentals. But do bear in mind there's quite major pitfalls around corporation tax and VAT. They're not horrendous issues. You just need to follow the rules and look at them carefully. If anybody wants more guidance on this, by the way, there is quite a whole chapter about this in my book, The Charity Treasurer's Handbook, that some of you might know. It's published by Directory of Social Change, and it's got a chapter dealing with some of these issues in fairly understandable language that you might find quite helpful. But do be clear on the purpose of any trade. Is it the service or activity part of your objects? Is it primary purpose? If so, subsidized prices may be justified. You must make sure it's affordable by poorer people. Or is it primarily a fundraising activity, in which case, of course, you want to make a realistic profit to support the other work of the charity. I will stop there. That's been quite a rush through, but thank you for your attention, and I'm happy to take a couple of questions.
Yes, thank you, Gareth. Yes, there's a couple of questions here from John Larmer. Does mortgage payment count within allowable expense?
Generally speaking, the interest on a mortgage would count, but not the repayment of capital.
Right.
But I would stress, like all expenses like that, it's got to be shared pro rata. So if the building is used partly for a trading activity and partly for other things, you'd have to pro rata your mortgage interest like you would pro rata your fuel bills and everything else.
Okay, yeah. From Louise, the danger with registration for VAT for halls is that if the treasurer changes and a volunteer takes over who has no VAT experience, which is quite common, returns may not be made, leading to a serious cost when an independent examiner or HMRC realise it has been overlooked. This is the issue, isn't it? Because charities, village hall charities, are mainly run by volunteers, and regularly there's a turnover of, you know, who's going to be treasurer and the officers, and they do change. It is something that if anybody was registered for VAT, they'd have to have very strong and robust financial policy in place and handover.
Yeah, I would absolutely endorse that, and I would certainly say if you are going, I mean, I agree exactly with what Louise is saying in her comment, I would normally say that when a charity gets to the stage of needing that registration, you might want to think about, can we really carry on running with a volunteer treasurer, or do we need a part-time finance officer or a part-time paid finance officer? If you do decide that yes, well, we've got a volunteer treasurer who can do this, I would say it's absolutely imperative that he or she trains up a deputy treasurer as a successor, something like that. Really.
Yeah.
Okay.
I think we've got time for one more question, and we will get back to the other ones after the event. But I know we've got the AGM following straight after this event, so we're limited on time. Electric vehicle charging is a current prospect for many halls. Small halls will pay 5% VAT on energy supplies. However, if selling, on what rate of VAT do they charge? Oh, I see. If they're selling it, so they're buying it in electricity at 5%, what rate would they charge if they're selling it at an EV charge point?
Okay, I think I'm going to pass on this because this is quite a specialist area about VAT on vehicle charging. I think the government is introducing a thing that any new installation of charging points have to have electronic devices to calculate it separately, and then I think the standard rate might be starting to apply in due course. But it's a specialist area. I'm not going to try and comment. But it's not going to be a charity specific issue. It's about the general rule on electricity on charging points. But certainly, if a large amount of your electricity is being used for a vehicle charging point, you might find your energy supplier no longer classes you as a charitable user in the first place.
I really am sorry that we're going to have to sort of answer the questions perhaps later. Gareth, if we forwarded you a couple of these questions by email, is that something that you would have chance to perhaps send us an answer afterwards?
Yes, I'm very happy to follow up a couple of questions from this presentation and so on. If anybody wants more extensive help on these issues, then my firm Kubernetes Partnership, we do a kind of advice service where you can just pay a small fixed subscription, and some people might find that useful. But certainly, I'm very happy to answer a couple of follow-up events from this.
I really apologise because we obviously it's such a big topic, complex and difficult to get our head around. But I'm sorry we couldn't allow more time. But thank you, Gareth. That is such a comprehensive. I know it's a huge topic to do in such a short period of time. So we very much appreciate that you've joined us today. So thank you very, very much.
Thank you. And I'm just posting a link to the Treasurer's Handbook in the chat if anybody wants that.
That's fabulous. Okay. Yeah, we'll pick up on that. So we will pass now because it's time. We're going to have to sort of conclude the conference before the AGM. So what I'm going to do is pass over to Emma. She's just going to do a few slides to do with the new membership scheme that we're launching. So Emma, I'll pass to you.
Okay, thank you, Helena. Just a very brief short presentation today. Some of you will have been with us yesterday and the day before, so if you want to go straight on to the next slide. Really, I just wanted to highlight what a fantastic team of people we have at Rural Action Derbyshire. This is just a selection of pictures from various things. You can see Zoom pictures and us celebrating getting some funding with a glass of fizz, and Joe Dugdale and his partner got married, so we sent them a card with lots of staff pictures on. So it's just to say that behind all of the work we do, we have a really great team of staff and trustees and volunteers that make all of this possible. The picture at the top, the three ladies, Jo, Becky and Sally, have got food for Jigsaw Food Bank, which we collected through the staff last year and made a donation to them. So we do as much as we can for our own community, as well as the job that we're doing, the day jobs that we're doing. Next slide, please. So we're currently recruiting new staff, and we're also going to be launching some trustee recruitment very soon. So if anybody is interested in working with us in a capacity as a volunteer trustee, then please let us know, respond to anything that we send out, or please forward it on to any other communities or people that you think might be interested. Next slide, please. As you know, we offer specialist advice for halls and have done for a number of years. And as Louise said, you know, Helena is a fantastic resource, and her knowledge of all of the different quite complex elements to running the different types of halls really is phenomenal. And with having Louise and Acre in the background to support her, there's not a lot she can't understand and help you with. We can help with community engagement, and we can help with areas of perhaps research. If you want to find out what you think your community might benefit from looking at trading, then we can help you with that research to capture the information from your community. Next slide, please. So our membership scheme is going to give you access to members only newsletters, which will be quite regular. And I'm not going to say exactly how regular, because if there's information that you need, we'll send it out to you when you need it. We're not going to wait until the next monthly newsletter. So it really depends. You'll get information as and when it's important to you. And it's the same with the digital resources. We'll get our website updated and get the information out on social media. So if your hall is on social media, please make sure you're connected with ours, so that you see our posts. You'll get discounts on Acre information sheets as a member, discounts on tickets for training and events, and discounts for consultancy with Helena. Next slide, please. We're going to be developing some services, and it's interesting because Chris from the Plunkett Foundation mentioned that they have a list of suppliers, a sort of a supplier directory, and it's obviously something that is an important element, that if we can create partnerships and have people in a directory that you can then access that will be useful to your hall, I think that would be an enormous benefit. Next slide, please. So our priorities are to make the membership affordable, to keep it simple, and to give you payment options. We appreciate that not everybody has the same ways of paying for things. Some people are still using checks, for instance. So we'll certainly consider all payment options. If you join before the 1st of April, £50 plus VAT, and that's only £1.15 per week. And even if you don't join until next year, it still only works out at £1.73p a week. And I think for the unique specialist support that you'll be getting as a member will really make the difference, and it will be worthwhile for £1.73 a week. So it's our AGM coming up at 12:15. We'd be delighted if you wanted to join us, just sort of hear about how we've been getting on in the last year. I have put the Zoom link in the chat box, but I forgot to actually say this is the Zoom link for the AGM, so I might do that again. It won't be long. There'll be a short presentation from our chair and from our treasurer and from our chief executive, and some resolutions. So we'd be delighted if you could join us with that. And I would like to say thank you to the speakers today, and to you all for attending. Thank you very much.
Thank you, Emma, for those summing words and to explain the new membership scheme. So that's come to the end of our 3 days. It's been quite hectic for us at this end. So I hope that you've managed to join on the sessions that you've been interested in, and that it's worked well for you as a delegate. It's been a great opportunity for us to provide this information. And we hope that as halls are moving forward post-COVID, that we've given you some ideas, some inspiration, some thoughts, how you maybe want to go back and engage with your communities again, how you can do that, learning about becoming more environmentally friendly, looking at the idea of community hubs, the idea of the warm hubs and the digital hubs, new ideas about the EV charge points, improving Wi-Fi, all sorts of community businesses that we've heard from, with community cafes and shops, things like that. Lots and lots of new and exciting opportunities. So do get back to us following the event if you need further information or want to pick up and follow up on any of these. We will be sending out all the information, copies of all of the slides, links to the video yesterday about the warm hubs. I do recommend that you do sit and look through that as well, because that's really interesting, from Christine Nichols. Also, we'll send you the link, if you've not already seen, how you can access the Acre Village Hall National Report that Tom spoke about earlier this morning. So you'll get all the information. So really, there's a couple of things I want to cover now before we finish. Acre, as you know, for the last few years have run Village Halls Week. So for next year, 2022, the theme is going to be innovating for the future. So there will be resources and materials made available shortly, which we will circulate to you, and that will help you to prepare and plan how you may want to participate in Village Halls Week in January next year. And we're soon coming around to the end of the year. Another Acre project, which we've mentioned throughout the conference, is the fact that safeguarding safeguarding is an issue for everybody. It's everybody's responsibility. We're trying to raise awareness amongst all the village halls across the country. So it's quite apt in a way that it is actually National Safeguarding Adults Week this week. So it's worth us mentioning it again. And there's lots of resources, things that you can access on the Ancraft Trust website. So there's a link there. And also, if you haven't already done so, please do look at the information that we've got on the RAD website. So there's a link there to to our website. You'll find lots of resources and information to do with safeguarding in your village halls. It is a very important issue that we don't want, halls to overlook, as it is a legal requirement. So I'd like to say a huge thank you to everybody that's attended over the 3 days, and again to all of the speakers. We've had a fantastic range and variety of different speakers from all over the country. So Gareth is based up in Scotland, so it's fantastic using the Zoom way of delivering a conference that people can join us from different places. I think actually on Monday we had somebody joining us from New Zealand, so that was not as a speaker but as a delegate, so that was quite interesting that we'd reached that far, and they were very welcome to join us. But before I finish, a huge thank you to the sponsors, of course, otherwise we wouldn't have been able to provide this free to our delegates. So ESP, you probably noticed on the backdrops who our sponsors are, and to both Zurich Insurance and Norris and Fisher insurance brokers. So thank you very much to the sponsors today. So I don't have to say safe journey home at the end of the event, but if you are going to stay around, then please do, you're very welcome to join the AGM, as Emma's already pointed out to everybody. So that will be starting quite shortly at 12:15. So it's been a pleasure, and if there's any follow-up, there's the feedback code there. Or if you're stuck with any of these things, do get in touch with us, and Sky will help you to sort out how to access that feedback survey, or anything else following up from the conference. Please do get in touch. So all I need to do is say thank you, and bye-bye.